Okay, let's talk about this, unexpectedly high rate of growth for the second quarter for the Indian economy. We're joined by my colleague Ajay Mishra and senior economic journalist Shubhomoy Bhattacharjee as well is with us. First, you, Ajay. Now, to what does the government ascribe this? Prime Minister Modi said pro-growth policies, and much of the steps that his government has been taking, reforms, etc. But if you break it down in terms of what has emerged in the document itself, what do you see?
Absolutely. I think the major growth drivers of second quarter growth numbers has been the manufacturing and services, and this was reflected in the PMI, the Purchasing Managers Index, both for manufacturing services in last 6 to 7 months or so. So there has been a good demand both from the manufacturing and services, and within services, the financial sector services have grown by more than 10%, whereas the IT services have also done well. Going forward, it is also expected that the reforms like GST rationalization will also have an impact in the coming quarter. The policy documents as well as the chief economic advisor in the Ministry of Finance have said that the repo rate revision, which has shown the decline of 50 basis points in the last couple of policy announcements, have a positive bearing on the overall GDP numbers. But the growth numbers, along with the stability in the inflation, have made this story brighter for India, because if you see the Eurozone, Germany and France are growing at sub 1% level. Japan is going at just 1.1%. If you look at the US numbers, it is at 3.8%. So India remains the fastest growing economy, large economies, and it is growing despite the fear of stagflation as raised by the IMF. So India is really standing out and emerging as a bright star when it comes to growth numbers, along with the price stability.
Yes, and may that remain. But Shubhomoy, could you look into the fact that there were projections that there will be 7.2%, 7.3%, but 8.2%. That's a significant jump from what was estimated. So, what's the story there? Are you able to hear me, Shubhomoy?
Yeah, I can hear you. Okay. The reason I held on was that I suspected it was Ajay. Basically, what has happened is that the projections by lots of agencies at around 7% sort of tended to overestimate the impact of the Trump tariffs, that it will not be pushing further. Now, there will be the impact of Trump tariffs at some stage, but it's not now. We are talking about the period July to September. All data shows that incremental credit growth, the IIP, Index of Industrial Production, as Ajay was pointing out, any other things that you look at in terms of also agricultural production. Remember, we have had the largest ever production of food crops in India. All of these obviously show a huge ramp up in the productive capacity of the economy. And nothing exemplifies it more than one particular statistic, which I've been talking to this evening, which is the credit flow to the MSME sector. It has really jumped massively. This is a very strong change which has happened in the Indian economy, which we have not seen earlier. And if you look at this number, it's growing at something like 28%. This is an indication of two things. First of all, that at the lower income groups, investment and earnings capacity have risen very sharply. Patch it with the fact that the private consumption expenditure has been the biggest grower in this data. Both of these together show that in the lower income groups, there has been a huge rise in consumption, investment, and everything. As a result of that, the economy has benefited, which is why when we see that every sector has had a ripple effect from this broad basing of the growth development. And this was something that was not anticipated, which is why you get this big difference between what the agencies estimated of around 7, at best 7 to 7.2%, to something like 8.2% now. It is this differential that has created the growth booster for the Indian economy. And there are, of course, lots of reasons for it, why this has happened. We can go into that later. Yeah, Gautam.
Okay. And Ajay, what are still the areas of concern? And if we were to look beyond this particular quarter, which has been stupendous, there is, of course, that overhang that is supposed to kick in of the high US tariffs. But at the same time, GST 2.0 reforms, the rationalization of the rates, reduction of rates will also be kicking in. What else do you think might work in the favor of keeping the growth rate higher than most of the experts have been estimating?
Gautam, I think the H1 growth figures has been 8% till now, and as Shubhomoy sir was pointing out, that the impact of the US tariff might come after the Christmas, because till Christmas the orders were already in place, and the shipments had already gone up till December. So the net impact of the US tariffs might come in the third quarter or so. But luckily, the third quarter is also seen as a busy season for Indian economy, and typically the economic activities after the monsoon picks up when it comes to the festive season. And we understand that the GST rationalization, the full impact of GST rationalization are going to be reflected in the next quarter's GDP numbers. But as far as the challenges are concerned, there are some challenges on the export front, as you say, that there might be some impact of the US tariff. Secondly, going forward, the uncertainty in the global markets and volatility in the forex markets, for example, might have some kind of bearing. But government is confident that the policy measures, as has been decided by the cabinet, that the support to the manufacturing sector and the recent labor laws reforms are going to have a positive impact on the economy, and are likely to neutralize the much anticipated impact of the US tariff on Indian economy. So there are global uncertainties, as the policymakers anticipate that they are going to be prepared for. But as the outlook which the chief economic advisor has have shared with us, that is that the healthy corporate sector balance sheets also augur well for the sustained private investment in the H2 of FY 2026. So he's banking on the private sector consumption and private sector expenditure and investment from the private sector, as they say, that
Okay.
the balance sheets are going to be improved, in a sense, as the stock market analysts are also expecting that the earnings going forward for the next two quarters are going to be better, and that are also being reflected in the stock markets numbers. So this confluence of stable inflation, sustained public capex, and reform momentum across the economy, as reflected in the upward revision of the FY 26 GDP growth projection by various agencies, is what the government, especially the Ministry of Finance, is banking on.
And Shubhomoy, what are the markers which will be coming in the next few weeks and months that could determine the course of the Indian economy? I can think of the RBI's monetary policy revision, whether rates will be further reduced, inflation data as well, plus trade deals. Today, the Commerce Minister announced that we're going to be working on a SEPA with Canada. And of course, the big one would be the Indo-US framework deal, and then perhaps a trade deal as well. Also, the India-UK trade deal is still to come to effect.
Yeah, Gautam, but you know what? These are the external markers. What's happening and which is leading to a substantial change is the domestic markers. And I think that is something substantial. I talked about MSME. Just let me tell you the figure. It was 1,028 billion in February 25, credit to MSME sector. That is 3,742. That is exceeding both credit to industry generally as well as to agriculture and allied sectors. Massive growth. This is a substantial change. Similarly, in services, we are seeing health, education sectors, which are now going much more. The government expenditure, remember today's fiscal deficit data shows government expenditure, revenue expenditure has plateaued. It's flat. But Services is showing a massive growth. What does that mean? That means services not of fiscal, not of health, I mean, not of financial sector, but of neither of construction, but of other sectors, which is health and education, is rising very substantially. These are the changes that are making the Indian economy a very interesting place to look at, and I think would be the determinants of what is going to happen next in the next quarter. The biggest change that you will see in the next quarter will be that none of this data includes GST.
Yeah.
The GST impact will be coming in the third quarter because this is only up till September. So October, November, December, third quarter will be the GST quarter, and that is where we shall be seeing some fantastic changes. So that's what I expect to be happening. And of course, as you rightly pointed out, I'll be very surprised if in the December review of the monetary policy, RBI doesn't go in for a rate cut aggressively. Yeah.
All right. Well, let's hope that the Indian economy keeps getting this strong wind beneath its sails and keeps forging ahead. Thanks a lot for joining us for the moment, both Shubhomoy Bhattacharjee as well as you, Ajay Mishra.